Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. Our show title today, What's Up with Retail? And this segment is brought to you by Xceligent, building data everywhere. Visit Xceligent.com. That's Xceligent. It's a place where commercial real estate professionals like us get great information. Yes, so we're talking about retail. Please welcome my next guest, Edward Muey. He's with the REIT, Real Estate Equity Research Analyst with Morningstar Credit Ratings, joining us on the phone. Edward, thanks for joining us.
Hey, thanks for having me.
So, Edward, what is going on with REITs? You know, there's with retail REITs in particular, because we're seeing in the news a lot of closures, bankruptcies, a lot of closures that we're seeing are coming up in 2017. What do you see?
Right. So clearly, there's a lot of disruption within the retail industry right now. A lot of it due to the ongoing growth of online commerce and how that's affecting traditional retailing today. And so I think what we're seeing right now is the shakeout of the growth of e-commerce, while retailers have been trying to adapt to changing consumer behavior and really trying to rationalize how big their store footprints have to be. And that really affects REITs, because REITs are the ultimate landlords who are charging these tenants rents. And right now the market is just really uncertain and really afraid of kind of how retail might look in the future.
So how have these retail REITs performed, say, last year and first quarter?
So within the past several years, retail REITs, along with the broader REIT market, has been relatively strong, just due to low levels of new supply being added to the market since the financial crisis. But especially kind of with the new year and the wave of tenants or retailer store closings and news of bankruptcies, retail REITs have been hit pretty hard, down approximately 20% from levels in 2016.
Wow. So what do you expect moving forward for retail REITs?
So looking forward, it's really a story about a bifurcation of quality real estate and the underlying properties and locations that they represent. And right now, my opinion is that the market is generally misunderstanding or painting kind of overall retail real estate and retail REITs with a pretty broad brush. I think there is still a compelling argument to be made for good locations, good convenient places where consumers still find value in the convenience and immediacy of being able to run to the store and pick something up. And good real estate should prove to be, I think, a critical part of retailer merchandising strategies in a future where both physical retail and online retail can coexist.
Right, because a lot of that retail is necessity driven, right? Some of these REITs have freestanding properties that are drug stores, they're auto stores, they're places where we're going to have to go no matter what.
Yeah, exactly. A lot of service-based companies, like you were mentioning, auto stores, and even kind of within shopping centers, grocery stores that have been relatively not impacted by the growth of online commerce.
So how do you expect some of these REITs to perform related to some of these larger malls? Because as you said, some people are painting a broad brush that retail's in trouble, but yet I see some of the malls in Atlanta which are packed. They just seem to be doing really well. Rents are still high. Occupancy is really high.
Right. I mean, I think like we were talking about before, retailers are looking over their portfolios and really seeing where they still, really need to have a store open to reach their target customers. And usually those are locations that have proven to be very productive and profitable for them from a sales per square foot point of view, that have really kept these malls well occupied and customer traffic steady despite kind of the overall negative media take on malls. And so Within the mall industry, there are about 1,200 malls throughout the U.S., and about 400 of them are considered high quality. And we expect that into the future, as online becomes a bigger part of retailer strategies, they'll be consolidating their locations into these higher quality malls.
That's interesting. So there's 800 non-high quality malls.
Approximately.
So what are these REITs doing well, Edward, that you see that are doing well with their properties related to some of these closures and preparing for it?
Sure. So I think at this point, many mall landlords have contingency plans for retailers on their watch lists, retailers who might have financial difficulty or might need a helping hand in terms of the next lease they might sign. But also, they've really proven to reinvest in their properties and adapt their assets to changing consumer behaviors. And so right now we see a lot of a shift in tenant mix from away from apparel, which has been relatively hit hard by the growth of e-commerce, to more experiential service-based firms or restaurant F&B type options that have really driven increased demand for these properties.
So what should REIT investors who like the retail space and they want to look at retail REITs, what are some of the things that they might want to think about today?
I think just like most real estate, it's really about, in retail especially, about asset quality. And so you're really looking for good locations and good quality properties with landlords who continually reinvest and adapt their offerings to their tenants and to consumers. And a lot of it is you can see within just the underlying fundamentals, high occupancy levels, consistent rent growth, and consistent levels of spending and reinvestment.
Okay. And how about the diversity of the assets? There's some benefits looking at a REIT that may have some varied exposure to the different property types within retail?
Right. So, within retail, we're talking about regional mall REITs. We're talking about shopping center REITs, and I think the story is a little different but similar within shopping malls. Within shopping centers, grocery-anchored shopping centers. We expect to continue to perform pretty strongly again because grocery has been relatively insulated from growth of online. And then, like you were mentioning before, higher quality malls that have tenants who are driving traffic and landlords who are adapting their offering to the consumer to really bring in those dollars.
And what would be the quick answer, Edward, to geographic preferences? If you looked at retail with a broad brush, are there certain areas of the country that you'd say, hey, if they've got more assets here, that may be a better one to look at?
I guess not necessarily broadly geographically, but I think if you look demographically, areas that have low unemployment, proven wage growth or population growth, and I guess that could lead you to coastal areas, West Coast and East Coast. But like all real estate, it's a very local game.
Yeah, that's true. Good point and good information, Edward. Thanks for joining us. We appreciate you being on the show.
Great. Thanks again.
Great. Yeah, and do keep in mind if you're investing in REITs, you want to look at their management. You want to look at their geographic locations. You want to look at the property types and the types of assets that they have. And I think investing in REITs can be a good way to go, especially if they're down now. Maybe there's some upside. Stay with us. We'll have more on retail real estate. I'm Michael Bull. This is America's Commercial Real Estate Show. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.